This is Daniela Camboni for Kitco News, and we are still continuing with our coverage from the Denver Gold Forum. Joining me now is Donald-Coxe. He's an advisor with BMO-Financial-Group and a keynote speaker here at the event. Donald, thank you so much for being with me today.
My pleasure.
So you were a speaker here earlier in the day. Let's start by recapping it a bit. What was your message to attendees here at the Denver Gold Forum?
Well, I'm an historian, and I've been in this business since 1972, so I thought I'd give people some major historical dates to get up to date with what is happening in gold. So I said, first one is 1971, August, so back to then. Nixon closed the gold window, and that started the gold bull market.
Right.
Then that ended when three things happened. Margaret Thatcher got elected, Ronald Reagan got elected, and Paul Volcker was retained as chairman of the Fed by Reagan, and bringing in monetarism. And so we entered a 21-year triple waterfall crash for gold and most other commodities, which ended roughly on 9/11. So I asked people actually for a minute of silence at the beginning of 9/11.
Right.
And so triple waterfalls are very, very important events because you have roughly a decade up and then 2 decades down. The next triple waterfall was Japan, ended at their rise ended at the end of the 80s. They're still in it. The next one was the commodities, was the crash of tech stocks. So when you got that out of the way, what you've done is you've cleared out all the excess production. You've cleared out all the belief systems that these things are going to go on forever. And so then if some surprise comes along, then what you have is a new kind of bull market.
When you say surprise, a black swan event?
Yeah, but a good surprise.
Okay, good surprise.
And in this case, the big good surprise was the advent of China, and also the fact that the governments had, in fact, done a good job of reducing their debts during the 90s, but we had a buildup of debt then in the last decade, and people began to realize it was unsustainable. So what happened with gold was gradually more and more money started to be moving into gold. And we've gone through, this will be our 13th year. So then the question is, what happens next? Well, I said that with the upcoming election in the United States, I'm telling you that if you own gold and you want to make more money on gold, you should be rooting for Obama. Recognizing that probably the kind of people in this room wouldn't be rooting for Obama.
Right.
And that because I pointed out that he runs a deficit of over $1 trillion a year. His first 2 years in the White House, he didn't produce a budget at all. In his third year, he produced a budget which achieved some sort of record of futility. It was voted 97-0 down by the Democratic-controlled Senate. Now, for sheer futility, that is a landmark. And his only proposal for reducing the deficit going forward is to tax the 1% of rich people. And I said, if you tax that away, you might raise as much as $500 billion over the next decade, but that doesn't put a dent in it. So what we're going to have is more of the same. And meanwhile, in the Eurozone, what we've got is continued problems, because what changed things was this was the first time that we had a currency that was not backed by any government, any tax system, any army, or any navy. So gold always traded against paper currencies, first the British pound, and gold did not go up against the British pound for 95 years because that was a good currency. Next, after 1926, was the dollar, and the dollar suppressed gold until the closing of the gold window. So then we all of a sudden had a new player, the second biggest currency system in the world, a meta-currency, a postmodern currency, a figment of a socialist imagination that relies on getting 17 governments to work well together, unanimously. So I told them a story of why, back in the 90s, I said it would never work. They set up a committee of the Maastricht Treaty to designed the banknotes for this magic new currency, which was coming out in 2000. And it was going to have the visages of the great contributors to Western civilization from Europe. Good idea, right? That's a sensible idea. They met for 2 years and gave up the idea. They couldn't agree on anybody. Those centuries of European wars and resentments, they couldn't agree. Now you say, well, Beethoven, sure they could agree on him. No, he backed Napoleon. Look what Napoleon did to some of us countries. Okay? Well, Mozart, what about him? Oh, he was a Mason, so some of the Catholics didn't like him. Leonardo? Well, he had some personal sexual practices which weren't, we thought, as good. Marie Curie, brilliant woman scientist. Oh, but she was engaged in atomic research. And that could have led to the atomic bomb, and therefore, so they couldn't agree on anybody. So I said, back in 1996, if they can't agree on any one European that they all respect, how are they going to make this currency work once something goes wrong?
And here we are today.
Yeah. And therefore, they keep coming up with new agencies and mechanisms and backstops. Last year, gold had a really big surge, not driven by the dollar. The first time that's happened.
But by the euro.
By the euro.
Right.
And so, thanks to Super Mario,
right,
that's been apparently put on hold. The dollar has now been devalued once. We're going to have bigger and bigger deficits. And so, therefore, gold's function as a store of value is being asserted. But I said this time what's going to happen is the gold stocks will outperform the bullion.
Now that's a different point of view from what I've been hearing. Okay.
That's right. So why have they underperformed? So I pointed out that by coincidence, 6 years ago, Pierre Lassonde and I spoke at the same conference, just as we did this time. Okay. And I gave the keynote, and he gave another address at the Society of Economic Geologists Global Convention, 100th anniversary of geologists worldwide. And I addressed in that the fact of what was happening in the mining industry because they stopped producing geologists pretty much in the midst of the triple waterfall crash. And the mining companies then, when all of a sudden things turned around, they didn't have the right personnel.
Right, shortage of geologists.
In addition, the gold companies that survived during the crash did it by hedging forward because they were always able to get a bigger price for gold in the futures market than they get in the spot market. Some of them made the mistake of staying with that when the game had changed and nearly destroyed them. So they used financial engineering to stay in business. So the mining companies were more and more involved with financial people as opposed to geologists and mining people. Therefore, when they all of a sudden, they had every incentive to open new mines, they didn't have the kind of depth for doing it. Therefore, the costs, all those things went wrong. But I said, we've gone through 5 years of disappointments, but now I believe that they've got their acts in line, by and large. And therefore, we've got lots more young geologists being produced. So those problems of shortages are being resolved. That's what markets are all about. Once young people discovered that there would be jobs if they went into geology, they went into geology.
So you think that shortage will be overcome now?
Yeah, and therefore that we've got young talent coming along. And so I believe that therefore the companies will be able to staff up properly. And they also have learned from the marketplace the value of financial discipline. So the stocks are going to outperform.
When do you think this might start happening, that the stocks will start? Already started. But do you think that there's too many players on the field right now? We just saw an advent of so many juniors popping up on the scene. Do you think that could be a problem?
Oh, look, the multiplicity of juniors is the collective market cap isn't a big deal. What matters is whether the majors and the ones just below them, the kinds of companies that actually made the presentation in the meeting room, how their stocks do. If those stocks do well, then what you're going to see is the tiny little companies will start to pop. But at the moment, the market cap of all of them together isn't significant enough. So I'm not worried about them overwhelming us.
Do you think there's good management behind mining companies right now?
Well, I think it's, dramatically better than it was.
Okay.
Because once again, that's the way markets work. If you've got an industry that's doing well, it attracts good people. If it's an industry that you can see that no matter what you did, you wouldn't be able to make any money, you're not going to stay there.
Right. But is the fact that gold is high right now going to help these companies?
Yes, by definition, because it helps them right now to generate extra cash flow.
Right.
But then we have the magic of the accounting rules. See, you've got three kinds of reserves: proven, probable, and then you've got resources, or inferred resources. Now, those only can be counted into, any of those can be counted into your reserves if they are economic at the average price of the last 3 years for whatever commodity you're producing. So as the price of gold has moved up every single year, what that's done is has raised the value of what the companies have in reserves in the ground. And since I first came into this business, I've said the primary reason you invest in mining companies is not for near-term earnings, but for reserves in the ground that will improve in value. That's the real reason. And so those reserves are now, for these companies, if they didn't put another drill hole in the ground, what you see is the magic, those reserves become worth more.
Just on that note, we're over at 1,700 gold right now. Do you think that's the fair value of gold? Is that a real value for gold right now?
Not if we have another crisis in the Eurozone, and not if Obama is reelected.
Okay.
Then we got to have a two handle on it.
Interesting on the topic of Obama is I find a lot of people who buy gold are not big fans of Bernanke, but it's interesting to note that Bernanke is kind of doing them a favor with hinting around QE3, for example, or more money printing, because that inevitably helps gold, no?
Yes, but Bernanke hasn't increased the size of the monetary base one bit for 12 months, and according to Milton Friedman, that's what does inflation.
Right.
So he's actually, although he's been denounced by Yahoo Republicans on this, he's actually, now he's in a position that with the poor economic numbers, he can start opening up the spigots. He can say simply overall monetary growth has been non-existent, time to do it.
So Romney has said if he's elected, won't bring back Bernanke. And
Mitt Romney has not said very many absolutely stupid things, but that's one of the absolutely stupid things he said.
Really?
Yes.
So you like Bernanke?
Well, compared to his predecessor, Greenspan, yes. Greenspan is the most overrated Fed chairman in the history of the Federal Reserve. And Bernanke is the most underrated.
Wow, okay.
And sometimes there's some things like this that really upset me, which I think is unfairness. Look, he saved everything in the financial crash, which was caused by the big bad bonus bailout banks on Wall Street. That wasn't his fault. He had to deal with a crisis far beyond anything Greenspan did. And then he's had to deal with continuing crises in the Eurozone because of the interconnections in the banking system. We nearly lost a lot of our money market funds here because of. He's had to deal with gigantic challenges, and look, did he do everything right? Absolutely not. But what he has done is he's kept the system together. I think he's gone on too long with his financial heroin, as I call it. But he's been left as the only game in town because Congress has been, spending money like drunken sailors, and Obama. There's been no restraint there. And in addition, what we've got is this U.S. healthcare system, which Obama's brought in, which is going to raise the costs enormously. So all of these are things he's not responsible for. So it's too easy to blame him because he is the spokesman.
Donald, let's get back to the Republicans 1 second. This topic of the gold standard has resurfaced after 30 years. It's in mainstream media. People are talking about it. What are your thoughts on this?
Well, what I believe is it's a good idea to bring it back in through gold-backed bonds. And I've had discussions with the World Gold Council on this. They've been having discussions with European governments. Gillian Tett has talked about this in the Financial Times. I think that gold is going to work its way back in on little cat feet into the system. They're going to revise the Basel rules to allow banks to hold gold without having to have it as a risk asset. So quietly, people are saying the proof of why it's changed is that the central banks, who for 18 consecutive years were selling gold, are now buying gold. Now, that's a huge change. But of course, they're faced with the fact that holding the dollar, which is being devalued for a variety of reasons, mostly because of the government, but also because they were piled up with euros.
Right.
And the euro is not only a terrible currency in itself, but as I was explaining to the audience, the euro has destroyed the virtuous status of the other great paper money, the Swiss franc. Because the Swiss franc, they've had to try to devalue it to try to compete with Swiss shopkeepers and watchmakers. So the result is that that's been the most fantastic monetary expansion we've ever seen in one small country, since the Weimar Republic, really. And this is the Swiss franc, which was supposedly the repository of monetary virtue. Whom can you trust?
10 years from now, will the euro still exist?
No.
Wow.
No. But I pointed out to the audience that you shouldn't get carried away on that, because a couple of years ago, I was taking my son and grandson down to Texas to see the Cowboys play, and happened that we were walking, we saw what was, they said, the biggest gun show in Texas. So that's a cultural phenomenon. We went in to look at it. Well, they were, of course, intrigued by the guns, but I went over to the coins section, and I was charmed to see a display of dollar bills, because a mint, uncirculated, not creased version of a Confederate dollar bill of 1865 is worth more than a US dollar bill of the same year. Why is that? Well, it's because after the end of the Civil War, they used this Confederate money to light their fires. So you had a scarcity factor. So I basically said, you might, if you wait long enough for 100 years, the euro might be worth something.
Donald, is gold money for you?
It's not money. What it is a store of value. Money is much more convenient than that, and it takes the form of credit cards and things like that. So no, I'm not ever going to be walking around clanking gold.
Right.
But what it is I believe that money will be valued in relation to gold rather than the other way around.
So we know you love gold. You like the gold stocks. Do you still like physical?
Yes, but I remember that in this country, physical gold, profits on it are taxed more heavily. And that's when the Republicans finally got gold legalized, right after Nixon closed the gold window, and the Democrats were fighting on this. They had to give in and said, well, it won't be taxed for capital gains the way other assets. In other words, it's not really a decent asset, you see. That was the last twitch of resentment.
Donald, I'd like to go over two of your golden rules. So one of them you say is do not invest in companies that produce what China produces. And two, invest in companies that produce what China needs to buy. Well, gold is an exception here, obviously.
This was an overall rule that I began enunciating in 1998 for investors, period, about the stock market generally. I said China's going to change the world. And you shouldn't be valuing companies based on their ability to compete with European and American companies. And so then you invest in what China needs to buy, which I said is going to be commodities. And I've stuck with that.
But is China slowing down now? Or is there still a need for base metals?
Well, they've had a double-digit growth rate since 1981. Nothing like that has been seen in the history of humanity and may never be seen again. They're entitled to have a pause at some point without saying it's all over. The fact that Mr. C at the moment is hard to find is admittedly disturbing.
All right, Donald, just to sum it all up now, let's go back to gold in terms of where you see it headed. We're over $1,700. Where could it go?
I basically say that gold will be driven from here by the total expansion of paper money and of calls on paper money. And if they start reining in the banking system so it's not creating as many derivatives, that will slow down the growth in gold. But if the banking system is allowed to continue doing what it's doing, and this is the banking system, not the central banks, right? Then I believe gold could go up well above 2,000 over the next couple of years.
Over the next couple of years.
And after that is all that one needs to know.
Okay, well, we'll touch base later on then. Okay. Thank you so much, Donald.
Thank you. Bye-bye.
And thanks for watching this special coverage from the Denver Gold Forum. We'll have more for you later on. In the meantime, you can email me any comments and questions at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.